Coming up on today's guide. There comes a time in all our lives when we have to borrow money. We give you some need-to-know tips before you do. Ever been confused by percentages? We make them easier to understand. And ever wanted to look up what's going on in the world news on the internet? We take a look at how you can use the internet to find out more about stories like rising energy costs.
Well, not everyone has Eddie Hobbs as a financial advisor, and if you're trying to figure things out on your own, it can be pretty confusing trying to decide on the best options. Since the economic boom, Ireland has changed from a nation of savers to a nation of borrowers. There's a huge amount of different financial packages out there, depending on your needs. Do you need money for a holiday, a car or a house? The question is, with so many options, how do you find the solution that's right for you? If you're thinking of borrowing money, here's a really useful guide to get you on the right track.
From time to time, we're all tempted to spend more money than we should. We may be finding it difficult to make ends meet, or we might have a big expense coming up. Whatever the reason, many of us think about borrowing the money we need. Deirdre Rice of the Money Advice and Budgeting Service says that we should think carefully before borrowing money.
We would say to anybody, don't do anything without doing a budget first. Work out a plan and see what you can afford. When you're doing a budget, the first thing you have to think of is the roof over your head, which is your rent. And then you work down from your utilities, down to your food, down to the cost of travelling to work, from work. So you have to be very honest with yourself when you're doing a budget. Work out how much you have coming in, how much you need going out. And what's left over is the amount of money that you could use to either save or repay on a loan.
So, you've done your budget and you know you can afford to repay a loan. But which loan option should you go for?
I would suggest that you look at all the different options. There's plenty of them. One of them that's very popular at the moment is credit cards. So if you use your credit card, that's fine if you pay it back within the required time. A lot of people don't, and the interest then can be quite high.
Interest is the extra percentage you have to pay in addition to paying back the money you borrowed.
So if you borrow, you pay interest, and if you save, you receive interest, and it's a certain percentage of the overall amount that you have. People will often say, what's APR? They've heard of it. APR is the annual percentage rate, and that annual percentage rate is the rate of interest and other fees that are included in the loan you've received annually. The lower the rate, usually the better the deal.
Another option is to get a personal loan.
So a personal loan would be you go to your bank or your lending agency and you say, I'd like to have a loan for a holiday. And they will give you the money over a certain length of time and usually at a fixed rate. So you know exactly how much your repayments are going to be. The credit union would be an option whereby you usually have some savings yourself and you borrow against your savings. And also they're very flexible. So if you decide to pay the loan off earlier, there's no penalties or anything like that.
Whoever you borrow from, you usually have to fill in an application form either online or on paper. There are other options, like a top-up mortgage. Is that a good idea?
Top-up mortgages are usually only for big items like home improvements. It really wouldn't be recommended for a holiday or a car because you'd spend, even though it's a lower interest rate, it's usually over a longer period of time.
Another option is an overdraft, when a bank allows you to take more money out of your account than is actually in it. The problem with an overdraft is that the interest rate is often very high. Finally, what does Deirdre have to say about moneylenders?
Moneylenders have very high interest rates. They're usually on short-term loans as well. We would say to people, it's too easy to borrow that way, but yet it's very, very difficult to get away from it. So we would suggest to people that they look at other options and do not consider money lending. My general word of advice would be to everybody, no matter whether you're suffering financial difficulties or not, is sit down today and do a budget plan. It's good for everybody, and to see it written down in black and white is a very, very healthy thing to do.
Is this where I handle my loan application? Thank you very much.
I would suggest that everybody does that before they borrow anything.
That's fine.
Thank you very much.
Thank you.
Thanks.
Well, here today with us are Jim Foley, a literacy student with WordAid in Kilkenny, and we're also joined by Sharon Donnery, who's Head of Consumer Information with the Financial Regulator. Jim, we're talking a lot about finance and money today. Have you ever had to borrow money?
I had, yeah.
From a bank?
From the bank.
How did it work? How did that feel?
Well, you have to go in and tell them, I used to keep a few cattle, and you know, you wanted to buy cattle, more cattle, you had to go in and tell them what you had.
Yeah.
You go on that, like, you know.
Yeah. It's not an easy thing to do,
Not an
is
easy
it?
thing, no.
No. Did they say yes, though?
But they didn't in the beginning, I had to bring my wife.
And they said yes to her. What, Sharon, does the Financial Regulator's Office deal with? What's it for?
Well, we were set up in 2003 and we're an independent watchdog to make sure that consumers are protected when they're dealing with financial services firms. So we regulate banks and insurance companies, brokers, credit unions and so on. A big part of our work really though is providing information for people to help them when they're going to financial institutions, or to help them if they want to borrow money or deal with debt or any of those sorts of things, or they're thinking about saving. And a big part of our commitment to that information is that it's all in plain English. So we're really trying to help people understand financial products and make the best decision for themselves.
If somebody is going to open a bank account, what would you advise them? A deposit account or a current account? Or are there other sorts they should be looking at?
Well, I think nowadays most people really need a current account, particularly for things like getting your wages paid in and also for paying bills and things like that. So most people would generally look at a current account. With that, obviously it's important first of all to, you know, check out all the different options. Is there a branch near you? Is that important? Or do you particularly like banking on the internet or over the phone, and does the bank that you want to deal with offer that? You should also look out charges, how much is it going to cost you? And then the other thing I suppose is your ID, to make sure that you have some form of identity and something to prove your address when you're going to the bank.
Because it's changing all the time as well, isn't it? Some banks will now say that they don't charge you at all for certain types of accounts, and you need to shop around and keep an eye on what's happening, don't you?
That's right. A lot of new banks have come into the market in recent years, and there have been a lot of changes, and they can often be better value or better deals out there. So it is important to shop around, and I think particularly to make sure you choose the account that's best for you. You know, someone else you know might have an account that's really good for them, but it mightn't be the best one for you. So make sure you get the information yourself as well. And we would say to people not to be afraid to ask lots of questions, you know, to go into the bank and ask questions, or, you know, if you're buying insurance or whatever, and make sure that you understand what they're saying, and don't give up until you're happy that it's been explained to you properly.
Right, they're there to serve you.
Exactly,
Yeah.
that's right.
Jim, what do you use your bank account for?
Well, like, I get paid by cheques. I sit to the ground now, you know.
Yeah.
And I have to go in to get my cash there, you know.
Yeah. Do you lodge the cheques
I lodge
then?
them in, yeah.
Yeah.
You have to lodge them like, for so many days before you draw out.
Right.
You know,
Oh,
a
they
week
have to
or
clear them.
clear them, yeah.
And do you go into the bank often, or would you use the machine?
No, a few,
or cheques?
4 or 5 times a year.
Yeah.
Not too often.
Yeah.
We're dealing with the credit union as well.
Oh yeah, they're fantastic too,
yeah.
aren't they? Sharon, if somebody is saving for something big, like the holiday or the car or house improvements or whatever, saving can be so difficult that people are tempted to borrow instead. What would you advise there?
Well, I think to some extent we've kind of lost our saving culture, and it is a very good habit to have, and you know, we would be saying to people to, you know, encourage children and so on, and even to start early. If you can at all, we would think it's better to save up rather than to borrow, because obviously borrowing is going to cost you money. We would say though, if you are going to borrow, to try and match the loan to what you're going to buy. So if you're going to go on a holiday and you're going to borrow for that, try not to be borrowing over 5 years, so that you'll still be paying off that holiday in 5 years' time, and the holiday is long since forgotten.
Okay.
Or if you're buying a car, you know, you might have a car for maybe 5 years or something like that, so try not to be still paying for that in 10 years' time. So to try and match what you're doing with the period of time. And then I think to be very clear about how much it's going to cost you, because there is lots of money to be saved by looking at different options, you know. So check out the bank, check out the credit union and see what's on offer, and make sure that you understand how much it's going to cost.
Right. Jim, do you do that? Do you shop around for things like banks and bank charges?
No, I don't.
We don't really have a habit of it, do we?
No.
Yet?
We used to deal with one credit union for a few years, and one bank for the last few years as well.
Yeah.
Stayed with them, like.
Because why is that? Do you tend to
I
get
think
to know?
sure, it doesn't make much difference. I don't much money in, you know what I mean, in the bank.
Yeah.
I wouldn't have a loan. I have no loan in the bank.
You don't have your millions stashed in
No,
the local credit union. Do you think it's can be difficult to figure out the information that we're getting in the post a lot from financial institutions and insurance companies? And do you find it complicated?
Well, I did shop around one time for the insurance.
Yeah.
It was going to cost me a lot more than what I had. Honest, no, yeah, that's true.
So you found you were better off staying put?
Yeah, I'm getting money off my aisle this year to give me,
Oh, you're getting good at this now, aren't you? Well, Sharon, the financial regulator publishes all the information now in plain English. Tell us about that.
Well, I suppose what we've found is that people get an awful lot of information from institutions, and an awful lot of it can be difficult to understand. And, you know, there's words that people don't understand, jargon, technical terms, things like that. So one of the first things we did was, you know, to do a little bit of research about that and to find out that what people really want is plain English, easy to understand. And particularly the volume of information. People tend to like, you know, small, bite-sized, get straight to the point and tell me exactly what I need to know. So we've put a big emphasis on that in our publications. And I suppose the other thing we have is that as the regulator, we're independent. So you're getting information, we're not trying to sell you anything, and it's in plain, clear, easy to understand language.
No hidden agenda.
Exactly.
Do you get feedback from members of the public who might say to you, for example, I got this thing from an insurance company in the post and it's not making any sense to me?
Yeah, we run a drop-in centre in Dublin city centre, and we also have a helpline that people can ring if they have questions, and a lot of the questions will be about things like that. I got this, I really don't know what it's about, or I've been charged this and I don't know why, and can you explain this to me, and sort of just go through statements or go through terms and conditions to explain them. But that's one of the reasons why we'd say to people, when you actually go to deal with the institution, make sure you ask lots of questions, and, you know, don't be uncomfortable about that. You're entitled to know what you're signing up for, and you're entitled to know how it works. So make sure they explain it to you properly.
Right. Well, something that can trip us all up when we're considering our financial options is percentages. And think of the signs for sales saying things like up to 70% off. Yet when we get into the shop, we find that things are still quite expensive. This next piece should help you to understand percentages a little bit better.
We hear about percentages all the time. This ad offers 25% off the price of glasses. And this packet contains 33% extra free. But what exactly is meant by a percentage? Imagine that this circle is made up of 100 tiny pieces, all the same size. One piece is 1 out of 100, or 1% of the circle. The 100 pieces together make up the full circle, so 100% is all of something. If we take 50 pieces away, we have 50 pieces left. So we can see that 50% of something is half. This is 100% of a pizza, or a whole pizza.
Mary, would you like some pizza? Oh, yes, please.
50% is half the pizza. 25% of something is a quarter. If we divide something into 10 equal pieces, each piece is 10%. 20% is a fifth. And 30% is roughly a third. If you're trying to work out what a percentage refers to, remember that 100% is all of something, 50% is half, and 25% is a quarter. This should make it easier to work out what other percentages refer to.